Hey everyone, welcome back to the channel. Today we're going to be talking about one thing that a lot of people feel, but very few people talk about, which is the next looming financial crisis. We're going to be breaking down what's happening with bankruptcies, layoffs, and Gen Z's financial stress, and why the wave of retiring Americans could put a lot of pressure on the stock market, especially when it comes to us going in the next year of 2026. Let's go over the warning signs that we've seen in the year 2008 versus 2025. To understand this specifically, we need to look at the past versus the present. During the financial crisis of 2008, over 1.1 million Americans filed for bankruptcy. It was one of the clearest signs that everyday people were collapsing under financial pressure. Now jump to today. In 2025, the number of bankruptcies have been rising again. There's been over 100,000 filings in the last 12 months, and that number is climbing every quarter. And the main question that you might be asking yourself, is it as bad as 2008 yet? No. But what matters the most is the trend here. When bankruptcies rise steadily, it means households and businesses are having a hard time keeping up with the bills, loans, and expenses. And in the past few months, there's been a lot of layoffs, and the job market keeps on getting worse. The job market, which looked strong not too long ago, is starting to show a lot of cracks. We're seeing more and more layoffs, there's slower hiring, and rising unemployment. And for the average person in America, it creates more financial pressure and uncertainty. And there's a lot of questions that people are having nowadays. What if I lose my job? Can I afford rent? How long can I last if something goes wrong? Will I have enough savings to pay my bills during this next upcoming recession? Most people nowadays don't have enough savings. They're living paycheck to paycheck. Even a single unexpected expense on them is a major problem. This instability that I'm talking about is one of the biggest warning signs before a big financial downturn. Most Americans are feeling financially unstable. Inflation is high, interest rates are high, and groceries, rent, and basic necessities are feeling heavier than ever. And people are thinking, my finances are very fragile at the moment. Even people that have decent jobs, whether it's in healthcare or any other kind of field, they know that they could slip at any given moment and they can end up homeless or in a big financial mess, or even close to the brink of filing bankruptcy at this time. This lack of confidence becomes a self-reinforcing cycle. When people feel financially weak, they spend less, save more, and the economy slows down even further. And when it comes to Gen Z, they're the most stressed generation out there. Gen Z just graduated from university. They're entering the workforce and they cannot even find a job because there are a lot of layoffs out there, and many of them have student loans. And then next thing you know, they have more pressures on top of them. Go buy a house, and when they go look for a house, housing is extremely expensive. Job stability is weaker than ever. They cannot find a job. Mental stress and anxiety are at a record high for Gen Z. Youth unemployment is much higher than overall unemployment rate, which means Gen Z workers cannot even get their foot in the door. And like boomers like to say, Gen Z is not lazy. They're trying to build a future in one of the toughest economic periods in decades. And when an entire generation feels unstable, the economy becomes more vulnerable. And in the year 2026, here's a major factor most people never think about. Millions of Americans are set to retire in the next few years, which could shake up the stock market. When people retire, they usually sell stocks, cash out investments, shift money into safer assets. And now imagine this happening in 2026. This could trigger massive selling pressure in the stock market right when it's already struggling. A wave of retirees cashing out during a downturn acts like adding more fuel to the fire. It can turn a correction into a crash. And the main question here is, are we heading towards a crisis? So what are we seeing right now? Bankruptcies are rising, layoffs are increasing, people are feeling financially weak, Gen Z is struggling to find stability, a retirement wave is approaching, market valuations are already stretched. Individually as a problem, each one is manageable. but together they create the type of environment where a major financial crisis can begin. Now, by me saying all of this doesn't guarantee a crash in 2026, but it means the system is fragile and it won't take much to tip it over. Now, taking every problem into account, here's what I recommend for you to do to protect yourself. Build or increase your emergency fund. Lower your high interest debt if it's possible. Keep your expenses manageable. Strengthen your job skills and your resume. Be cautious with big purchases and don't over leverage yourself in a volatile market.